Welcome everyone to Vested Interest. This is Shane back again with another stock pick of the day video. It is February 26th. Today we are going to take a look at one in my portfolio. So I am long Lyondell Bassell. This is out of the materials sector. Let's jump right in the video. And if you have not done so, or you are stopping by the channel for the first time, if you find any value in the content, go and hit that thumbs up down below. Hit the subscribe button and join us on this journey to financial freedom. Join the Vested Interest community. We are dividend growth investors here. That's what this channel focuses on. And hit the notification bell so you're notified whenever we put out any new content. And share with anyone that you think might find value in the content, and drop a comment down below. Let me know what you think of the video whenever it's all said and done. All of those things really do help a small YouTube channel like me grow. Trying to get to 1,000 subscribers, so help me get there. I'm only going to get there with your support. So really appreciate everyone who has done that. Let's continue on. This is the Vested Interest Stock Screener. This is how I set up these videos every day. So we're going to run through them just like this. We're going to take a look at the business on a high level to understand the business, and that's where you should start as well. You should understand how a business makes its money, what their products are, what they're selling to consumers, and how they make their revenue. Growing free cash flow, I look back at the last 5 years and expect it into the future. We cannot predict the future, but if they're growing free cash flow, and you can project out what they've done in the past, hopefully it continues to grow, and you want to come back from time to time and check to make sure it is growing. A growing dividend over time, dividend payout ratio of 75% or less. Now this does not apply to REITs or BDCs or companies that are required, like REITs, to pay by law more than 75% of their free cash flow. Check valuation based on dividend yield theory, so we'll take a look at that. Buy below current cost basis or within 15% of its 52-week low. So talk about this just for a second. If it's not in my portfolio, I find a price that I'm willing to pay, and I wait for the stock to fall within 15% of its 52-week low. If it's already in my portfolio, I like to buy it under my cost basis or under where it sits at 15% of its 52-week low if it happens to be over my cost basis, right? That just gives me kind of a what I'm not willing to pay above number for the particular company. We're going to look at return on invested capital and return on equity. I like 10% or better. And we're going to look at earnings per share growth. I like 5% or better. And we usually throw in revenue along with that. It's not really a metric I like, but we typically want to see growing revenue over time. And for financial companies like banks, we use price to book, specifically 1 being fair value, under 1 being undervalued, over 1 being overvalued. And you can use price to book for any other company that you want. Just compare it to other companies in its sector. Don't just use the 1 or lower metric. Must meet 5 of 8 to go on my watch list, or 6 of 9 if it's a financial company. Now, don't just blindly copy my stock screener. We all have different time frames for retirement. We all have different criteria, or should have different criteria based on our investing strategy. This is just one that I put together. Now, back to Lyondell Bassell. If you want to know more about them, check them out at www.lyondellbassell.com. That's www.lyondellbassell.com. That is their homepage where I pulled this information from. We are Lyondell Bassell, a leader in the global chemical industry, creating solutions for everyday sustainable living. Through advanced technology and focused investments, we are enabling a circular and low-carbon economy. Across all we do, we aim to unlock value for our customers, investors, and society. As one of the world's largest producers of polymers and leader in polyfin technologies, we develop, manufacture, and market high-quality and innovative products for applications ranging from sustainable transportation and food safety to clean water and quality healthcare. So what does that mean? Polymers, polyethylene technologies. It's like plastics, right? So they are producing a lot of the plastics that we use in automotive industry, in the food industry, and the products that we buy from the grocery store. That is really their bread and butter. You go down here a little bit about their history. With a nearly 70-year legacy of game-changing innovation, our company has developed new products and technologies that serve as the bedrock of the chemical industry. Below are some of our key contributions. 1953 to 1954, that gives you an idea of how long they've been around. Predecessor company scientists Carl Ziegler and Giulio Nada make breakthrough discoveries in the creation of polyethylene and polypropylene. Maybe you know more about, again, plastics. PE and PP resins are used today to make numerous products, including automobile parts, surgical gowns, children's toys, wind turbines, and water pipes. They were jointly awarded the Nobel Prize in Chemistry in 1963. So all those plastic bottles out there that you see can be contributed to these guys back in the day. Now, on to why we were taking a look at them down 0.45% on the day. We are talking about Lyondell Bassell Industries, ticker LYB, out of the materials sector. Closed out the day at $98.82. You can see pretty volatile throughout the overall day. Started out, looks like a high above 99 and finished out at 98.82. 52-week range as low as $81.24, as high as $102.05. So they are definitely closer to their 52-week high than their 52-week low. Average volume 1.7 million. Today's was 1.2. A beta, market cap of 32.087 billion. A beta of 1.19. So they are more volatile than the overall market. That's what beta is. Tells you the volatility of the market. 1 being the market. Anything under being undervalued or under lower volatility. Anything over 1 being more volatility. You can see that volatility here, right? That's a lot of volatility up and down like that. Even though it's only about $1.50 range. There's what it looks like. Price to earnings PE ratio sitting at $15.26 per share. Nice earnings per share on this one, sitting at $6.48 per share. Their earnings date is April 26th through April 30th. So, I mean, I'm not big on earnings dates. Companies are going to give you the best info possible. They're not going to tell you, you know, hey, we're in serious trouble, jump out of our stock. They're going to give you, so I don't pay attention to a lot of earnings calls, right? I might look at their bottom line projections, did they hit them, or top line projections and see if they hit them. But other than that, I don't spend a lot of time on earnings call. If you're interested in that, April 26th through April 30th, go ahead and tune into that. Forward dividend yield, $5 paid out in the year. Nice starting dividend yield, 5.04%. They are quarterly payer. We'll see that here in a little bit. Ex-dividend date, March 1st. So you want to buy them before the ex-dividend dates. February 29th would be the last day you want to purchase this one to be able to get the next dividend. 1-year target estimate a little bit higher according to Yahoo Finance, where I pulled this information from, at $101.35. So they see slight appreciation in the stock price from where it currently is at. You're really buying this one for the dividend yield, right? Now, let's go over here into statistics. We're going to take a look at dividend yield theory, right? We want to check out dividend yield theory, see if it's potentially undervalued. To do that, we take a look at 5-year dividend yield average, 5.13. We compare it to its current, 5.04. Same number over here, 5.04. I know it says forward annual dividend yield, but it's the current dividend yield, or what they're looking at for tomorrow. That's why it's forward. And since it is lower than their 5-year average, it speaks to some overvaluation on this. These numbers are inversely correlated. If it's lower, that's overvalued. If this was higher, it would be undervalued. Right now, at 5.04%, they are slightly overvalued, right? Now, they do have a payout ratio of 76.23%, so that is a little above the 5% or 75% that I'm looking for, so a little high on their payout ratio with a high starting dividend yield. We'll see how fast they're growing that. Again, you can see here, ex-dividend date, March 1st, payout on the 11th. Now, we are going to get into the financials a little bit and take a look at free cash flow. Now, there is a lot of good information under the financials tab. If you go in there, you're going to be able to take a look at their balance sheet, their income statement, take a look at their margins. Is their revenue growing over time? Are they paying down their debt? A lot of good information, and you want to be looking at that and understand that if you are investing in individual stocks. If you don't want to take the time to research individual stocks, stick to ETFs or index funds and just find one that you like, dump your money in it every week, and don't pay attention to the price. Just buy. That's an easy way to invest. I do have some ETFs in my portfolio, VTI, which is the total United States stock market, and VOO would be another one, which is the S&P 500. Whenever you hear people talk about the market, they are talking about VOO, the S&P 500. That's what everyone is trying to beat. That's what everyone's comparing themselves to, the S&P 500. Back to Lyondell Bassell again. Let's jump in and look at free cash flow. We want growing free cash flow over time, because typically if a company has growing free cash flow, they can pay down their debt, they can make acquisitions, they can reinvest back in themselves, and most importantly, they can pay out dividends and increase them over time. So 2021 was looking at 5.7 million, 2022 down a bit to 4.2, 2023 down a little bit more to 3.4. So this is actually not what you want to see. Decreasing free cash flow. They are repurchasing their own shares, but that does not account for the decrease in cash flow. As a matter of fact, their repurchase of their own shares is decreasing as well. So this would be something to watch. And if this trend continues, it would be a bad trend. We want to see them in 2024 pull back and start heading in the right direction as far as growing free cash flow. So right now, not looking good, at least over the last 3 years. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You pick any sources that you like. Just make sure that you are looking at more than one so you can make sure the information you're getting is accurate and up to date. Now, they have 13 stock analysts that have taken a look at this. They call it a consensus buy, though it is right on the edge of a buy and a hold. This would be a strong sell, sell, hold, buy, strong buy, right? We would like much more on this. And if you were to go to their website, you could click on each one of these and see out of the 13, how many are calling a sell, strong sell, hold, buy, or strong buy. You can't see that here because I just can't clip it out. And they have a low estimate of $90. Which would be lower, a 9.13% decrease from where it currently sits. They have an average estimate of $100.15, which would be pretty much in line with what we saw with Yahoo Finance. That would be a 2.13% from where it currently sits. And a high estimate of $109, which would be a 10.06% increase in the stock price. All the while, you could collect that 5+% dividend yield. Now, same thing, I like to get into the statistics tab and look at financial efficiency. That tells you how efficiently the company is investing back into itself. Return on equity and return on invested capital specifically. And again, I like 10% or better for these metrics. Return on equity for this one, 16.3%. So above the 10% I'm looking for. Return on invested capital, 9.66%. So a touch less than the 10% I like, but not egregiously so. I would be fine with that metric. Now, here's where the numbers start to look bad again. EPS growth, I like 5% or better. They're negative, 1.85% projected over the next 5 years, as well as negative revenue growth. So we saw that free cash flow decreasing. Well, that's probably because revenue growth is decreasing, right? Negative 4.64%. So this needs to turn around, or this will be one that's on the chopping block for me. Now, again, I did say I am long on this. So here's my Lyondell Bassell position, right? I do have 115.824 shares. My cost basis is $87.95. So I would not be buying right now. I would be waiting for it to come back a lot. It needs to drop 12.56%. I am up $1,271.11. Obviously, this type of company, I don't mind investing in for the right price. Very high dividend yield on this one. So I like it for the dividend yield. That's why I bought it. But again, if you notice, my buy-in price is much lower than where it currently sits, $87.95. If it was to drop below $87.95, I mean, I would be looking at probably close to a 6% dividend yield, and then I would look to add a little bit more. Right now, I'm not adding any. This is a hold for me. I'm just collecting that dividend that's going to be coming up here on March 11th and enjoying the 12+% gain that I've got on this one. Payout ratio, again, 77.4%. I think Yahoo Finance had it at 76%. Either way, it's over the 75% I like, so that is not good. Very high dividend growth, but we're going to see in a minute that is inflated by a special payout right here in 2022. So going back to 2021, they were paying $1.05. They raised that up in June 2021 to $1.13. And then here you can see that special dividend. June 3rd, 2022, a $6.39 dividend payout per share. That's not a typo. That actually did happen. That was a great dividend payout, but it is not their typical payout. They do have those from time to time. But August 26th, they raised it up to $1.19. That is their typical raise, right? It's around a 5% dividend raise. So this 40% is off. It's really around 5.15%. I did the math. The last one they did on May 26, 2023. They raised it up from $1.19 to $1.25. That was about a 5%, like I said, 5.015, I think, percent dividend yield raise. So this is a little off, and it's off because of this special payout here. Well, that is really it for this one. Let me know what you think of Lyondell Bassell in the comment section down below. Is it one you're watching? Is it one you're avoiding? Again, I bought it a couple years back now. Much cheaper prices. It's kind of run up now. It's not one I would be adding at these prices. I would wait for more of a pullback, but it is one in my portfolio. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. And let me know what you think down below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Lyondell Bassell you'd like me to cover in the Stock Pick of the Day series, drop it down below. I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. So I'm only sharing my investing journey for educational and entertainment purposes. Investing involves risk. You can't use money to never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of a certified financial advisor.